How you doing, guys? This is Gaven, the host of the show Pips Like a Pro, with me, but more importantly, with our professional in-house trader, Mr. Andy Demi. How are you doing this week, my friend?
I'm well, mate. I'm well. How was your weekend?
Interesting to say the least. How about you? I'll just leave it at that. So,
Yeah, no, it was a good weekend. It was, just a bit tiring with the kids, but no, it was nice to take them out, and our usual barbecue on Sundays. It did give us a little bit of torrential rain in the middle of it, but makes it a bit more fun. And it was good.
That's a little bit nuts. So look, guys, our promise to you every week is to give you an FX trade within 15 minutes. We've got that coming up, but obviously we're just going to have a chat about an element of your trading. So whether you're a beginner, an intermediate, or an advanced trader, there will be something here for you, guaranteed. Just to do a few shout outs. So we're live on YouTube. So we've got Slav representing us out in the world of YouTube. Thank you very much for that. And we've got Anita live on Facebook. Hi to you. And also to Brucey. You know how to flatter a man. You know how to woo a man, Brucey. How are you doing, you handsome
What does he want? What do you want, Brucey? Just let us know.
With a compliment like that, it's all yours, sweetheart. It is all yours. Roy, you don't get as much because you've been a little bit more reserved and probably telling the truth. Morning, evening, gents, which is very factually correct. So look, let's crack on with it. We've got a load of stuff to do. It's the start of the month. Who knows what's going to be happening this month? There's a whole load of news out there. There's a whole load of news out there that people don't know about yet. There's a whole load of news out there that people think they know about, but might not actually be news. So just give us a rundown of what you're expecting for this month from the mindset of a professional trader.
We'll kind of take a look. We have some important numbers coming out this Friday. So non-farm payrolls is going to have a big impact, in my opinion, as to what the rest of the month brings. And we've been kind of seeing. I've been seeing people post in the group worrying about whether there's going to be a crash across all risky assets, and I guess when you kind of see, I think one of the posts I saw was Robert Kiyosaki post something regarding a crash. But the reality is that, nobody really knows those things. And the only thing we can do as traders and analysts, I guess, is to prepare to make good predictions. But the reality is that you're not going to make money by following what somebody has posted online or what people's views are, because the reality is if it's in the public domain and we haven't had a crash, then it's just speculation, and markets don't just crash like that. That it normally happens in a very unexpected way. So. But of course, there are indicators, and that's what we're kind of, we know the last speech by Powell, the FOMC meeting, that he kind of really hinted about, the end of tapering and potential, future interest rate hikes, really kind of rest on the jobs report. And so that's why this Friday could have a big impact as to what happened to the rest of the month. So I would kind of be a bit cautious about the kind of positions that you're opening before Friday.
Definitely interesting times. And I think the caveat to all of that, because look, I've listened to him, I'm sure you've listened to him, and people like that, they do present some very good information about inflation rising and all of this stuff. Very, very poignant details. And obviously there's the small fact of the matter that the C and the V has been running rampant for the last 18 months. So how that hasn't affected it more than what it has tells you that something's up. But all you can do is just go off the data that's in front of you, right? I think that's what you're trying to say.
Yeah, definitely. And the thing is that you can't react to speculation. You can't react to, like, those things are present right now, those indicators, and of course we should take them seriously. But I think somebody posted in our group some good advice, like, you might miss out on a massive 1 or 2 months, like, just being really, really cautious. And often the last run before a crash can be the most profitable, because it's just everybody, it's like the last big hurrah before a crash. But like, you of course, it's just like I always say, have all the indicators in the back of your mind, but don't let them push you around. Like, don't let them influence what you do. You have your plan, like you have your set way of doing things, and that's what you need to focus on. And it's a bit like when we take a trade and then somebody else says, oh, actually no, I think it's going down, and then you close it and actually it went exactly where you thought, and you're like, oh, why did I close it? Well, because you were influenced, you were pushed around by somebody else's opinion. You've got to be strong when you're trading. Like, if you want to be a pro trader, you have to be very, very strong-minded and have conviction with your ideas, no matter what else is going on around you. And that's really, and even if you're wrong your way. You're wrong by following your rules, and that's absolutely perfectly fine to be wrong that way. And I think, right now, and in any market really, but now especially because we've been speaking about, I've been saying that the stock market's overinflated for years, right? Imagine if I had taken a short 3 or 4 years ago, like where I'd be right now, like broke, basically, right? So it's like, the point is, it's been overheating for years, and it is overheated, of course. And we're speaking about the stock market specifically here, but the point is that you can't react on just that as a speculation. Like, you have to just follow your plan, follow some rules, and just trade in a structured way. And when it happens, it happens. And then we can make money on the downside as well. And obviously with FX, it doesn't really affect us in the same way, but it does, because it will affect, it will affect the dollar, and ultimately it will affect what happens in currencies. But that's a kind of deeper conversation.
Cool. So look, with that being said, that's the overall market sentiment for this week, and possibly for the month. And obviously we talk about this every week on a Monday, so that could change next week. So before we go into the live chart analysis and the news, to try and see what information that there is for this week with regards to data, just want to ask you, so the topic for this week is, what is the best time frame to trade FX, and why?
Well, I guess, like, what's good about FX is that you get liquidity. You get a lot of liquidity most of the time, most of the day, and whatever currency pair you're trading. If you're trading the sort of top, I don't know, I guess the majors mixed together, which gives you about 27 currencies approximately, you get a lot of liquidity. And what does that mean? Well, it means that even if you're scalping, even if you're trading on a 5-minute time frame, a 1-minute time frame, or a tick chart, you are essentially trading. You won't have the problem of slippage and getting in and getting out, all those kind of things. So it makes FX really available for any time frame. So in terms of best time frame, I think that the best way to answer that is, like, it really depends on a number of things. But one, your personality. I think that's important. And then two, how much time you have and the quality of the time that you have. So what do I mean? Let's break that down. Now, if you're working all day long and you're tired and you come in and then you want to scalp the markets without having looked at the markets for the whole day, I'd say that's going to be quite challenging. Not impossible, but quite challenging, because, like, you haven't got a feel for the market, right? And, like, when you're trading, like scalping, for those that are beginners that are listening to this, scalping is basically where you are in and out. You just catch some reactions and little moves here and there, support, buy support, get a few pips and get out. And you're doing that kind of just intensely, that type of trading really requires you to be in the zone, like to be watching the markets, to be seeing what's going on, getting a feel for things, just that, so you get that, build that intuitive part of trading. So it's really more suited to people that are, one, quite fast paced, but also two, that have the time. They've got a few hours in their day that they can do it. For a lot of people, that's not going to happen, right? Because you've got to work and you've got to earn an income somewhere, and then you've got to come home and then you've got to trade. In my opinion, for most people, the best time frames is the hourly and the 4-hour chart. Why? Because they give you a kind of an opportunity to basically have a reasonable stop. You don't need to time the market perfectly. You can have a systemized way of doing things. And it's not going to take months for you to hit your target, right? So it's like, let's say if you're trading off an hourly chart, you'll probably hit your stop or your target within, say, 48 hours. And if you're trading off a 4-hour chart, it could take anything between 1 or 2 days to 1 week to hit your target or stop. Most people are kind of comfortable with that kind of time frame. If you kind of go with the sort of like, hey, I enter on a daily and a weekly, there's a couple of problems. One, it can take a few weeks to a couple of months to hit your target. And that's not the worst thing, because you might say, I'm okay with that. I'm quite okay with that. But you have to bear in mind, in Forex, there could be what's called a negative swap rate. In other words, you could be paying interest every day that you're holding that position. And what that's doing is it's eating into your profit every single day. Now, there are some currency pairs that allow you to earn interest. So depending on the interest rate differential between the two currencies. If you are earning interest, that might be a viable plan. Like if you think, okay, I just want to have a few passive ones that are earning interest, and I think they're going to go up as well over the next few weeks, that's absolutely fine. But for the majority of people, I'd say the hourly and the 4-hour time frame make the most sense. If you are a fast-paced kind of person, then I would lean more towards the hour if you can't trade full time. And I kind of, and I'll pause because I'm sure there's questions, but like I prefer, if I'm being honest, Gavin, my preference is day trading for me personally. You know, I'm quite a fast-paced person. I love just getting I get things done yesterday, right? I just want to get things done. I don't like to work where it's like 3 months deadline and whatever. I like to just get things done, and that's my personality, and that's how I like to trade. But you have to also adapt, because you're like, okay, well, I've got 3 kids, not sleeping enough. I've got other obligations. I can't day trade the whole day like I would, right? So in that case, I would dedicate 4 or 5, maybe 3 or 4 hours a day to day trade. And that's enough, because I can get a good feel for the market pretty quickly. I'm experienced. I understand what's going on. And I can day trade in those hours and be absolutely fine. If I've only got 1 hour, it's really tough, I've got to say. If I've got 1 hour to day trade, it's not worth it. You're better off doing what I'm saying, so like putting in orders and trying to catch the swings in the markets using an hourly and a 4-hour time frame.
So yeah, guys, if anybody's got any questions before we jump into the news breakdown, pop them in the comment section. Brucey's saying 2 bottles, 1 Stella and 1 water. No, definitely not. One's water and one's coconut water. Why? I don't know. I just fancied a bit of coconut water alongside my water. Very exciting Monday evening here for me in Australia. Talking of Australia, we got Con tuning in from Australia. Good to have you with us, mate. And I'll say it because I say it every week. Please, whoever you are, very polite. Hello, Andy. Hello, Gavin. Thank you very much for that. But we have no Scooby-Doo who you are. Please.
No, he actually did say hello, Andy and Gavin, not hello, Andy, hello, Gavin. You just added the hello bits. He didn't say hello to you.
Oh, okay. Fine. you must be drinking the Stella then, I'm guessing. Is not how you construct a sentence, but I think I understood what you mean. So thank you very much for that. But please click on the StreamYard link. I was trying to be serious then, Andy. Please click on the StreamYard link so that we can see who you are, just like mystery person number 2, who also likes coconut water, Gaven, just in case you picked that one up. But we don't know who you are. We don't know who this person is with the good taste in coconut water. So with that being said, let's jump into a question from Brucey. Do not try and trade for a living until you know exactly what you're doing. I made that mistake and it hurts. Spoken from experience. That, Andy's speaking from his experience, and that's what it's all about. You have to embody that, and you've obviously done that. You've survived. You haven't ended up in a mental home, and now you're able to embody that wisdom and that knowledge, and obviously you're finding a way that works for you. So thanks a lot for sharing that. And
can I just say something on that? I think it's a strange one, because I'd advise people. I agree with Brucey, definitely, but if you have gone through that, it's a hard one. Like, because I can honestly say when I was trying to really get consistent, I did do that same thing, where I quit a sort of a lucrative position to day trade, to do this full time, and it didn't kind of plan out as I wanted it to. But I must say that the experience did help me. Like I learned almost like what not to do. I don't know if I've said those words correct. No, what not to do. Yeah, what not to do. And like it. So I guess if you're in a fortunate position where you don't have, like at that time I was okay because I was living at home and I didn't really have costs and things like that. So I was kind of fortunate that I could do it at that time. So if you're quite young, you're living at home, I wouldn't necessarily advise not to try it. Like, not necessarily, you're not going to make a living off it. If you've got $1,000 in your bank account and you're going to fund an account, you're not going to make a living from it. But you could do it full time if you wanted to, just to get the experience of it, and you will learn a lot. So in general, yes, like it's good advice, but like it can help, like because sometimes you just got to throw yourself in there. It's like, okay, now let me see what I can do. Like put yourself in that pressure situation. So
and also a little caveat to that: if you have got $1,000 in your bank account and you know what you're doing, you can apply to be a funded trader. And we've got something coming soon with that, where there's going to be up to $2 million in funding, which is coming very soon. So just a little sneak peek on that. So another question that's come in from our YouTube live crew. Andy McAlpine, good to have you with us, my friend. Andy, did you I've just done it now. Andy, it's one of those days. Did you plan to become a trader when you were in uni?
No, not at all. If I'm being honest, Andrew, like I didn't know what I wanted to do. What I did think at the time, I thought, well, I'll try and get into banking. It pays well. It's, I guess, mathematical. I'm pretty good at maths. So I just did an economics degree. And then it wasn't really until I did my master's degree at Reading, the ISMA Centre. So I did a master's degree called International Securities Investment and Banking. Ooh. And essentially it was fantastic, mate. No, I loved it. Absolutely loved it. And I got to meet industry experts. I got to meet people at big banks, but also one of my modules was in trading. And that's kind of where I got to learn about trading, and I started entering competitions and that kind of stuff, and started to learn about stocks. And I really loved it. Like it really, really appealed to me. Like it appealed to my personality. It's like, like sometimes when you know something's right for you, it just felt absolutely right. I thought, I wonder how hard it is to become a trader. And that was kind of a thought that went through my head and I did loads of things at that master's degree. Like I learned about portfolio management. I built portfolios. Like it was a very hands-on master's degree. But the thing that I really liked was trading, because it kind of felt like I was in control. Like I could make as much money as I wanted to, I guess. It felt like that. like it was down to me what I did, not just down to what somebody offered me. Do you see what I mean? So I guess that's why it appealed to me. But then I really loved the things that, you know, the things that went with trading. The more and more I learned about it, so had no idea, to be honest, but it really appealed to me when I started learning.
Interesting. And I think the moral of that message is that there's a caveat for everything. If you feel strongly that something's in front of you to do, then just go for it. I think at the end of the day, if you're being responsible and you're not leaving yourself too thin in whatever it is, your responsibilities and your roles, then go for it. So look, that's all the questions that we've got time for right now, all the questions that have come in. Let's jump into the live news breakdown, because this is the time of the show where we're going to pick all the biggest news of the week, and then from that data we're going to try and find a trade. Thanks to Anika for tuning in. Good to have you with us. Good morning, Andy. Good evening, Gavin. Thank you for clarifying that I get a good evening and not just my name. So Andy, are you ready to do the news breakdown?
Yeah, let's have a quick little look, guys. So we've so as I've been saying, like, you know, the key one is Friday. We've got coming out non-farm payrolls, and you can see here that this is the one that's going to sort of have an impact. So, like, we can just speak a little bit about the numbers. So this was the previous number, 235,000 new jobs created, which wasn't a terrible number. But from what Powell kind of implied is that he wanted it to be a little bit better. So the forecast right now for this month is 490,000. So in my opinion, if we get a number above 490 or above, that's going to have a big move potentially on the US dollar. So increasing the US dollar. And it could indirectly also affect other asset classes. So, like the stock market, and also like various cryptocurrencies. So, you know, you can never tell how the market's going to react. But one thing I will say is that right now, this is a more important number than other times, because, you know, if you kind of take the Fed's meeting, you know, a couple of weeks back, that's kind of really what was implied. Now, you know, essentially that if we get strong numbers, then the likelihood is that there's going to be a hike and tapering removed. And that basically means that's dollar strength. That's dollar strength coming for the next few months, which could really set the trends for us. And then vice versa, if the numbers are bad, then obviously that's going to be bad for the dollar. So anything less than 235,000 will be a disappointment. But where it kind of becomes interesting is the average hourly earnings. That is a really high number. I haven't seen it this high for a while. 0.6% we had on the previous month, predicted to go down to 0.4%. So we'll see. I mean, that's, again, you want this to be in line. If the hourly earnings is too low, so below 0.4%, so let's say 0.3%, that's going to have a bit of an impact on, even if this number is strong. So you kind of want the numbers to come out, and you want to see if these are jointly strong or jointly weak. And if it's in between, you may not get any clarity. That's the reality. In terms of before that, we've got some OPEC meetings running throughout the day today, which obviously will affect the oil price and maybe CAD. We got the rate statement coming out from Australia tomorrow. So that is coming out at 4:30 a.m. our time. Oh, actually, it's probably going to be slightly different. Hold on, let me refresh the calendar. You have to always, yep, no, it is 4:30. That's fine. And so again, that's obviously important. And what else we got? We've got the rate statement from New Zealand. So if you're holding Kiwi, so that we're previous 0.25 expecting a hike in the cash in the rate state in the Kiwi interest rate, but most importantly as well, the statement's going to imply how that progresses over time if that indeed does happen. And then the Bank of Canada governor speaking as well on Thursday at 5 p.m. as well. So it's a typical kind of first week of the month. Lots of rate statements and non-farm payrolls. Lots of news coming out that can create a lot of volatility. This is a tricky time to open up positions, I've got to say, in all of these currencies, because they can get really volatile, especially when we've got statements coming out. But of course, we will take a look at a currency pair and we will prepare something. But I'd kind of be a little bit reluctant to take a dollar position right now before important news coming out like this. I'd be more inclined to maybe look for a day trade or a trade that I can kind of cash in on before Friday. But we may not get too much movement before Friday in dollar pairs. And then we've got the rate statement from Australia. So that's so there's no euro news, there's no sterling news coming out, nothing official anyway. And and there's no yen news coming out. There's no Swiss news. So yeah, we can have a look and see what's going on in the markets. Anyone got any questions?
Yeah, so let us know if you've got any questions. But tell us, the main question I've got for you is, based on this data, what are you looking at? What currency pairs are springing to your mind? So obviously you said about dollar, but what are you, what's springing to mind for you?
I'd probably look at something like we could look at something like the Euro Oz or Sterling Oz. I'm not really expecting too much from the rate statement tomorrow. But of course, that doesn't mean that they again, I guess the thing with this is that if it's an overnight position, like I prefer to be in front of the screens. At 4:30, I won't be up. So we could look at something like possibly even something like Sterling CAD. Or even something more basic like Euro Sterling, Euro Swiss, where we just take the news out of the equation for this week. Or we try and get something in the dollar where we can get a run. So we'd have to try and get into a trade, today, tomorrow, get a run into the news and then move our stop to break even. So we could look at something like Euro Dollar and take a bit more of a chance.
For gold, would you consider gold right now with this news data and with obviously all the uncertainty around the news this week? Would gold be something that you would consider? Or
yeah, we can look at gold. I mean, basically, gold is still seen as I guess a safe haven. So, if money's moving away from the dollars, they still will move it to gold. Although our friend Bitcoin has taken some of that market share.
Taken some of it, mate. I've just on that note, I've seen a report. I'll share it in the group. It's one of the worst performing assets this year and last year. It's only grown I think it's not much in compared to other returns from other asset classes, which is really interesting how the landscape is changing. And obviously, we don't want to transition too much over into the B and the C words because that's tomorrow. And we know we've got our avid FX guys here tuning in. But it is very interesting what you said.
Yeah, no, definitely. And I think, like I said, I don't really, personally, I don't necessarily trade gold. But yeah, Fridays, you've got to be careful, if you're going to take a position on gold, and run it for the week. It's a smart play potentially if you can, but you've got to look at, say, taking profit or moving your stop to break even, because Friday could be a big payday if you get it right.
So are we gonna break down gold, or is there?
Let's do gold. We haven't done gold, and I know there's a few people that do trade gold. So yeah, awesome. Let's do gold.
So with that being said, just give me 1 second to get this set up. Here we go. This one, perfect. Oh, not that one. This one. Not even that one. Cool. So guys, thanks a lot for tuning in. You're watching Pips Like a Pro, the live show with me, Gavin, the host, and the man, the myth, the legend, Mr. Andy Demi. Today we talk about all things FX. We've already broken down so much. If you are just tuning in now, we've gone through the best time frames to trade with FX. We've broken down the biggest FX news of the week, and we've decided to go a little bit left field. And for the reasons that Andy's going to describe now, we're actually going to look at gold. If you want to understand why, then tune in to the replay of the show. If you are just tuning in now, to understand how we've got to this point after breaking down the biggest FX news of the week and all the high impact news. So with that being said, we've got some live analysis ready to go on gold, and our promise is to try and find you a trade within 15 minutes. Are you ready for this week's challenge, Mr. Demi?
Yep, I am ready. I'm absolutely ready. So let's, and again, just for those that are just tuning in, just remember, guys, we do have non-farm payrolls, which will have a big impact potentially on gold. So the ideal plan will be to try and get into some profit at the start of the week, get the right direction, and then we could either cash out maybe half and move the stop to break even, or just move the stop to break even and see if we can get a big move into the news. So it's something we used to do quite a lot in the hedge funds. We used to run positions into the news with no risk. And then obviously, but the risk is obviously you give back any profits that you've made, but the potential is huge if you get a big number, which we could definitely get on Friday, as we said. So in the interest of just kind of like, being transparent, gold is not something that I trade. I have traded it many times before, but at the moment, it's not something that I've traded for a little while. Having said that, a chart is a chart, and we can definitely break this down and give you my opinions as to how this might move. So here's the data that I've got. Okay, so I've only got data until going back to 2006. I'm sure there is more data. I don't know if there's anything else here. Let me just have a look at Axie. If there's anything, if the XAU symbol is here. Otherwise, we'll go with what I can see there. Let's see. We've got XAU. So let's have a look and see if we get any more data there. Is it the same? Oh, we do. Excellent. There you go. That's it. That's better, right? So we've got even more data right now. So let's do a little bit on the weekly chart. Okay, so let's have a little bit of a breakdown and see what's going on here. So firstly, what I'm going to do is just going to quickly add in our trend lines here. There's our up trend lines right now, and I will just zoom in over here and have a look. So you can see we've recently just broken this trend line. So that kind of gives us the idea that the market will most likely move towards the next trend line down here. The next thing I'm going to do is I'm going to just plot my Fibonacci here and have a look to see where the projection is. And that looks quite great. That looks perfect. So basically the Fibonacci is projecting that we're going to basically go down to here, and you can see it matches perfectly there with our trend line. So so the initial bias is down. Just looking at that in the first few minutes. I quite like that it matches with this old 1618. So I quite like a push down towards 1620 as a good area to target initially. I quite like that little spike into that as well. And we've got a nice little, between 1600 1620 looks good. So let me go and have a look at what the lower time frames are saying, and we'll see if there's a specific setup. So I'm just going to open up a daily chart. And where is XAU? XAU, where are you? So here's our daily chart. So we will just, because we already kind of have a little bit of a picture, but I'm going to just put in my down fibs here because it could be telling us something slightly different. No, it looks quite similar actually here on the daily. So that's pretty good. Let's have a little look to see how this market likes to move. And that will just give us a bit of an idea as to, so we've got that kind of movement. Okay. Just getting a feel for the price that we like to move. Yeah, that looks quite good actually. It's not too bad. So what I'm doing here, guys, is just I just want to get a feel for, like, what the downtrend could be like. So you had like you could see that was holding quite well, and then we kind of broke it, and then we've gone down again. So I'm just going to take that as an example. And you can see there that market right now has reacted perfectly to that line. So that's a good indicator that as long as we stay below this line, that we could be heading lower. Now, the other thing that I'd like to do here, guys, is I'm going to just plot my sub Fibonacci, because I just want to see if there's any other information that might help. It may not, but I always like to just have a look and see if I don't know if I've got the right one on there. But so that gives us so current fit. That's quite good. That's pretty close, isn't it? So even the sub fibs are kind of telling us a move down to this sort of 1620, 1600 zone looks really good. So I really like this zone, guys. Let me see what we can do. So let's mark this down. I think this is a really great zone. Now, it could be a case of, like, you try and find a trade towards that zone, or you try and buy it down here. That could be quite good as well. So let me now go and see if we can bring in an hourly chart to see if there's anything else we can plan for now, and see if we can get a setup either to short down there, or potentially let's also look at the 4 hour. Why not? Very quickly. And all right. So just trying to get a sense for this channel here. There's an obvious channel that we have right there. Just want to see if we can get a reactive line off the back of it. So So you can see there. That's pretty neat. So if we are going to go down, and you want to get into this as a short, I guess a really nice price might be up here. In which case we can, let's see if we can do the sub-fibs here as well. So we've kind of got a 38.2 pullback right now. I wonder if it's going to kind of push up to this zone here. And then, so let's see, shape. Somewhere there. So between 1789 and 1806. And I wonder if you could do a short-term trade up to there and then reverse potentially. This is the uptrend line. Let's see if there's anything useful here. You've got a potential. I quite like this. If you're looking for, I don't know if you guys are looking for a buy. It's against the overall likely move, but I really like that little level there, that 618. And it's a good reactive level as well. Look, if you see there, it's recently reacted, and that would bring you quite nicely into that potential uptrend higher. So let me tell you the price, guys. That price would be roughly about 1737. Looks quite interesting, and I guess if you draw that sort of downtrend line there, that's what's happening right now. So you don't really want to buy this here for sure. So there's a couple of things we can do. We could look for a buy here. That 1737 looks good value to me. It's tricky to do anything else here in the middle. If we break through here, it may not go back up there, and then you can start to consider the short towards the bigger move down to here. And then I'd be looking for a reversal in this box. But bear in mind, if you are quite far away from this box, by Friday, it could be worth sticking an order in here in this box. If you're really, really close to it, I think it'd be really high risk to jump in front. So right now, overall, like sentiment to push it down there, but short term we could go up. And I think 1737 could be a good value area to buy here. And for those that just want to do some day trades, you could just look at that area there as a potential area just to scalp long. So I'll give you a kind of, for those that want a day trade, I'll tell you what you can do. What you can do is really simple. Well, I think it's simple. If this market does come down to here and you want to buy it here, you take the low point to the high point, and you target the most basic thing, which is the 38.2. So if it goes down to here and you think, yep, I want to buy, and you just want to get out quite quickly, you just target that, the 38.2. And that will be a quick little day trade. You could even close out, say 50% and leave 50% in case we do rally into here, for example. So there's a few different things that you could do to play that. I'll do one more thing here. Let me see if the DTR here. and see what one is working with this chart. So DTR today is pretty much there. It does tend to stay within it unless there's news. I mean, this one was probably news. There's a couple. I mean, if you wanted to, so this is basically the likely low of today, but there's no trade for me there. But what you could do is you can expand this in case something happens, and you can stick an order good for the day. So let's do 1.5, even more than 1.6 possibly. I'm just trying to fit the extremes into the market. 1.8. Yeah. So here you've got the extreme was at the 1.8, 1.8 here. The 1.8 is basically there, which is high. It's unlikely we're going to get there today. But if you wanted a super high, super high probability, but yet unlikely to be filled trade, you'd be putting a buy order there, which is if you want something specific, that is coming in about 1733, which is not far different from 1737, which is my suggested buy zone. So good for the day, high probability. If we were to drop today to this little block here, you could definitely get a high probability move upwards, make some profit, or you can use it to position yourself for a higher move up. If you break this line here, the likelihood is that we're going to start to look to push lower towards that 1620 to 1600 zone, in which case I'd expect a reaction to the other side. So that's kind of it in a nutshell.
Awesome work, Mr. Demi. Awesome work. So 2 trade setups found within 15 minutes on an asset that he doesn't trade that often. You are a man of your word. The chart is the chart, and you'll find the clues within it, right? You're a good trading detective, as it were.
Yeah, I mean, look, it's if you're trading a market like short-term stuff, it's better to definitely know it a bit better. But with the longer-term stuff, it's really just about building the same structure around it. So it shouldn't make any difference. It definitely helps if you know the market for sure, but it shouldn't make any difference if you're looking at those kind of timeframes, hourly timeframes, and above. So they look like good setups. That setup there for the day is super strong. If it got down there today, likelihood is it probably won't get there today, but you could still look at that zone tomorrow and see how it fits in with the DTR, and it could still be a high probability trade tomorrow. Remember, the goal, guys, this week is to try and position yourself so that if you want to run something in the news, you've got that option. The safe way of doing that is if you catch a little bit of a move, cash 50%, move your stop to break even, and let the rest to run. At least you make a bit of profit. If not, a lot of profit if it goes your way.
Awesome, cool. And then just before we leave, we've had a question. If it's possible to answer it quickly, is it true that Aussie dollar correlates to gold against the USD? Yeah,
I mean, that's a long-term correlation. I'll be honest, I haven't looked at that correlation for a little while. You can easily do it on TradingView. If you use the correlation tool, you'll see how they're moving together. That is a long-term one, but it does kind of vary, and they do move away from each other, or like all correlations. So yeah, because it's not something I actively trade, I haven't looked at that correlation for a little while. But if you use the correlation tool on TradingView, it's you will literally be able to map the two together, and you'll see how they move together. Yeah, and again, I think if you're going to do that kind of work, always remember why you're doing it. So don't do work for the sake of doing work. If you've got a strategy idea that you want to make money from, like, for example, it's like, you might buy gold and sell Aussie dollar because they've moved away from each other and you think they're going to come back to correlating again. That's fine. But it's important that whatever you're whatever work you're doing, I guess you've got to be thinking of it as like, how's it going to help me make money? But yeah, I definitively, I don't know right now how well they're correlated, but long term they are.
Cool. Well, look, hopefully that answered your question. Thanks a lot for tuning in, guys. We're going to be back this time tomorrow, midday BST, 9 p.m. AEST, to talk about all things that is the circus of cryptocurrencies. Should be an interesting show tomorrow. I know you've got quite a few things that you want to talk about already. So we will see you bright and breezy tomorrow, guys. Thank you very much for tuning in. If you're watching this live, if you're watching the replay, just as someone honest says, although they are mysterious, they haven't left their name. Hi, guys. Just got in, so we'll watch the recording. Hope all are well. As we do to you, we know there are many people that watch the recordings. That's all good. I know you still get a ton of value from it, and thank you very much for your continued support. So we will see you tomorrow, bright-eyed and bushy-tailed. Anything you want to say before we go, mate?
No, thanks for tuning in, guys, and we'll see you tomorrow. Take care.
See you guys.
Passeramo